As the equity markets have been rising, there's been a lot of chat around what's going on in the States, with Wall Street being led higher by those large tech stocks. Well, is that now beginning to unwind? Brian Noble joined us now from TraderNoble.com, where he's the founder and trader on that site. Brian, very quickly, what's your overview at the moment on the markets with specific regard to tech stocks?
Yeah, it's kind of a fractured market. We have the Dow making new highs. Briefly last week, came back off them. The Nasdaq has finally broken its 50-day moving average, led down by the tech stocks in China, which have had a bloodbath over the last few months. And we finally cracked the 50-day moving average of 74.95 on the Nasdaq, which is the first break we've really seen in a few weeks. We closed at the 100-day moving average last night. I think any rally back to kind of 74.70 to 75.20 in the Nasdaq is a sell, with a tight 75.55 stop. You've got to be careful, because anytime we've broken 50-day moving averages across the indices all year, they've all bounced back aggressively. People got sucked into going short. So you've got to be careful. So you've got to have a tight stop if you do go short. This is the first time that I'm looked on my own commentary to go short a particular stock market in months, many months actually. We see the S&P is at the 50-day moving average, where the Dow is still 500 points above it. So ideally, to get a bear market and to get all the doom and gloomers out there back happy again, is we need to see the three indices break their 50-day moving averages and close below it.
Yeah, let's bring the Dow up just to show what's happening. And this distance we've got here at the moment, 26,000, we're about 500 points short on the Dow Industrials. S&P 500, just for the record, just to give us some context about what's been happening, S&P 500 is just at the 50-period moving average. How negative are you on this index? And is that 100-period down at 28.24 likely to be your next target on the downside?
Well, it's amazing. When you support, it's like an elastic band. When the first support level is tested, like we were on Friday, we got a 30-point rally in the S&P into the close. Same again on Monday. We tested, broke below the 50-day moving average. Everybody got excited, and then we had another 30-point rally yesterday up to 2,900 in the futures contract for the S&P, and then we had a weak enough close led down by the tech stocks again. So the S&P, you would feel the odds are now that we're going to break this 50-day moving average, because we've had 2 or 3 tests over the last few days and we bounced off it. And remarkably, the S&P had not moved more than 0.8% for 50 consecutive days since July, which is a 50-year-old record since 1968. Last Thursday we broke that trend with a 0.82% fall in the S&P, and since then, periods of low volatility are always followed by periods of high volatility. We've seen the VIX spike up to 18 on the back of it. I think the odds are now that we're going to trade lower. Would I get too excited with the S&P in the downside? No. I'd still be a buyer into yesterday's low, around 65, 71, that kind of area in the S&P for a bounce back. Ultimately, if we do break 28.60 and close below it, I think we will go down and test the 100-day moving average at 28.25.
Yep. Okay. Just a quick return once again to the Dow Industrials.
I'd still be a buyer. We bounced off 26,220 on Monday. Had a good aggressive, almost 400-point rally off that level. I think today, if we can buy the Dow somewhere between 26,050 and 26,250, there's good support there. If we do break that, then I think we'll go down and test this 25,600 to 25,800, which is very strong support. I will be aggressive buyer there, because that's a low going back. There's quite a few chart points on that going back over the last 6 months. Really, to really get excited on the downside, you need to see the 100-day moving average at 25,450 get taken out and a close below there. At that stage, you'd have the S&P, Nasdaq would probably be testing their 200-day moving averages, and then you'd have the Dow would be below its 100, and then we can say we're finally in a bit of a bear market. But against that, we're in the traditionally weak period of October. We've got the midterm elections now in 4 weeks' time. Personally, I think if we can get through the next 4 weeks without getting mad sell-off, I would be an aggressive buyer into year end. I think we'll make new highs again. I think this market is not finished on the upside. I still think the S&P can trade back above 3,000, possibly 3,300 in a melt-up before this market finally rolls over.
Wow. Okay. All right. That's interesting. Let's go on to the currency markets. A lot of chat around Brexit at the moment. Of course, sterling is front and centre and trade on that. But have we seen sterling lift neatly against the US dollar? I think previously we've spoken to you. You were long sterling dollar.
I was long against 129.5. It's it hasn't really done a huge amount. We got up to kind of 133, backed off again. Like every time there's a headline out, the cable seems to move 100 points very quickly. But he knows we're making higher lows all the time. So I think as long as we can hold above 130, we've cracked the 50-day and the 100-day moving average. There's no reason why we can't go up to 135 in cable. And bear in mind, everybody's short. And if you go back to when Brexit, when we had the vote, we were up at 150. So the charts is a long way to go back on the top side. Go back to earlier highs this year of 140. So there's still a lot. I think all the damage is going to be on the top side. But you got to be careful. You don't need a big position given the volatility. But as long as we can hold 130, I still think cable is a buy in dips.
Yeah, that 135 level coincides the 200-day moving average. Obviously, it's an interesting level. But you're happy about that's your price target?
Well, you can see on the chart there, the 50-day moving average had held the market on the downside for many, many months. We finally broke above it. We've tested it again, and we broke above. And then last night we broke above the 100-day moving average. So it's building it's constructive. You're certainly looking at that chart. You just wouldn't be short. You wouldn't be comfortable being short, despite what the political situation is. At the end of the day, EU and Britain have to do a deal. The ramifications here of not getting a deal done are huge on both sides. So, if you stand back and think of it logically, they have to get something hammered out here.
Yeah, okay. Let's move on if we can. I want to force you now into a corner and talk about gold and silver, because I know that gold has been one of these trades it's really difficult to get any firm direction on. Gold, first of all, with gold consolidating at these sort of levels just around about the, 1190 at the moment, 1186 actually. Today.
Yeah, it's actually traded sideways for the last few months. It tested 1212, came back off it again. Again, it's not really doing a whole lot. It's performing much better than silver. If you go back to the August low in gold at 1160, it's held quite a bit. That's well above the December 2015 low of 1050. If you go back in contrast to silver has broke down below 14, got down to a low of 1390, which is just above the 1362 low of December 2015. So I still, sentiment is so negative towards gold and silver, and I'm a huge believer in the sentiment index, and with sentiment so weak, I still believe that silver and gold will have year-end rallies. The last 4 Decembers we've had huge rallies in both gold and silver into the February-March timeframe of the following year, and I think this year will still be the same.
Let's take gold. A huge rally would take you up to where?
I think if we can break and close over 1200, we need to break 1212, which has been the recent high. A break of that, then we should go up to 1230, which is the 100-day moving average. And then if we break that, then we're looking at possibly going up to 1280, 1300. Yeah. But the trend, as you can see, the 50-day moving average has held the downside for many, many months. We finally breaking up back, and it's again like that elastic band I was mentioned on the stock markets. Finally, this band will be broken, and then that 50-day will suddenly then become support level. Yeah. But I'd be more bullish given the fact that silver has got been absolutely hammered. Most traders are short silver. If you go on the CFTC, look at the speculators every week. So I think silver is a better bet, especially the fact that the market is only within 80 cents of a 3-year low. So I'm very comfortable buying silver at these levels down here. Even though if you look at a chart, it still looks bearish. But we're trying to get above the 50-day moving average, and if we can sort of break that 1490 high that we had last week and close above it. I know we ran back down to 1420, so we did a good sell off it, but if we break and close over 14,915, then there's no reason why we can't go back up to 16 again. Okay, all right, interesting. Brian, thanks so much indeed for joining us. Quick tour around some of the markets. That's Brian Noble from TraderNoble.com.